Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Thursday, the 2nd of August. We've had the FOMC minutes yesterday. It's been an interesting one. There is a split, obviously, between FOMC members, pro and con, or actually hold and cut rates. So they want to cut a bit more aggressively because there is fears of recession. And the thing is that markets didn't really like, although it was kind of hawkish event, because markets were expecting to see or to hear that the Fed's decision was based on pretty much not on something that it was a midterm adjustment. Okay, so for that reason, that was a little bit bullish for the dollar. There is, as I said, a split. There is will for some of the members to cut more aggressively, even in the next meeting. Also from Trump as well. He was saying the other day that the Fed should cut 100 basis points, but that's, of course, will be a bit too much aggressive. There is also now the rhetoric that the Fed should start using forward guidance. We'll see what happens. We don't know. Now, on the Brexit side was another interesting sort of events on the political side of things yesterday. Merkel is hopeful that Brexit deadlock can be overcome. The problem is that Boris is really pushing for a no-deal Brexit. He hasn't been really communicating or setting up meetings with EU, and he just wants to remove the Irish backstop once and for all. But obviously, this is not the case. It's not possible to happen, as the EU says. What is going to happen now is that volatility is going to increase on the pound. We might see prices dropping a little bit more, and this because the pressure increases following Merkel's sort of challenge given to Boris to find a solution to the Irish backstop within the next 30 days. Don't forget there is about 70 days left for Brexit. So today we don't expect much on the much market moving events. We'll have the PMIs, arrays of PMIs from the European Union, and then we'll go into US events. We'll have the wholesale trade, jobless claims, manufacturing PMIs, and of course then the consumer confidence index in the EU. I want to start with pound yen, okay? We've had the end of wave 5 here, A, B, C. Okay, this looks like an expanding flat. Okay, now, I was expecting this to end around here, wave B, right? And wave C to come around here. The thing is, since we broke that level, of course, we're now most likely looking to go at 130, at 123, 124 level, okay? So we've had this breakdown here, right? So since we broke that January low, we're really looking a little bit more bearish. We could have prices moving to down here and then move all the way up to around 153. So this is a very big opportunity if traded correctly. Down on the 1 hour, and why I'm expecting this to go a little bit lower is because after completing this wave 3 and correcting up here for wave 4, this correction, okay, looks corrective. It doesn't look impulsive. So there's an ABC and then a combination ABC again, or correction WXY, and from here, from 130, 131, 132 max, we can start looking for sells for another wave 5, and after that is completed, we're looking at a very good buy opportunity down at 124. That's going to go up at least like 3,000 points. So very, very good opportunity. Indeed, Euro New Zealand on the other side, Q has been weak, weaker than the Euro, but I don't think this is going to last for much longer. Now, this opportunity is similar. Obviously, the correction is much different. We have an A, B, C. We're still correcting for wave B, okay, with an ABC correction here. I see this as a flat. So, so after this wave B, okay, now this looks like a flat, okay, running flat, which means that we should have a 335 pattern, okay? So WXY here, ABC, 1, 2, 3, 4, 5. We've completed wave 3 and most likely wave 4 as well, which means we're expecting for a wave 5 that might or might not go up to 177, which is the previous wave 1 bottom, or even the previous high wave 3. We're not sure, but it doesn't really matter. What we expect from here is that either it's a triangle or have a spike up and then prices move low, because the correction wave 2 actually was pretty much nada, right? So that means that we are going to see a longer correction on wave 4. So that I'm expecting, since we broke that level, we had 1, 2, wave 3 now, then 4 and 5, okay? Now, it's very possible that prices will keep retesting this trend line and then finally just break below that level and start moving to the downside after a retest or after just a break below this trend line. It's not necessarily we'll have a retest, but this opportunity as well offers very, very, very good returns. It is a huge one, considering we are actually now completing wave B and we're going for wave C to at least 162, like that's 1,500 pips for the pocket. So I want to thank you for watching for another day. As always, I want to remind to keep an eye on our blog. It's where we cover the latest news, provide trading ideas and all the necessary tools traders need.